Welcome to another APO Prospectus review here on Ergo Invest. I'm Jermaine McDonald, and today we're going to go through the 138 Student Living APO Prospectus. So if it's your first time here, we do this kind of thing all the time where we go through offers that are made on the Jamaica Stock Exchange. We review it, try to share the high-level information about the offer so that you understand and can make an informed investment decision. So I'm going to go through the sections just in a minute, but let me just start with a word of prayer. So we thank you, Lord, for this day. Thank you for the ability to produce wealth. We pray, Lord, that you'll give us wisdom so that we're able to make wise investment decisions in Jesus' name. Amen. All right, let's get started. All right, great. So before I go any further, I definitely want to start by saying that the information viewed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities, including 138 Student Living. All right, so these are the areas that we're going to go through for this review. So the prospectus is 153 pages. So my review is going to focus on the high level areas enough for you to get a good understanding of the offer. So we're going to start with the company history. Many persons may not have heard about 138 Student Living before. We're going to go through that. We're going to talk about the offer, how much they're trying to raise, how many shares they'll have available after the offer. We'll talk about their use of proceeds, how are they intending to use the funds, and what the future looks like for them. Then we're going to go into the financials using their MD&A, that's management discussion and analysis. Then we're going to talk about their dividend policy. And then after which we'll go through the details, like letting you know how to apply, etc. This is a typical sort of closeout for these reviews. Just in case you make the decision to apply, we want to guide you through the steps as to how to do that. All right. So let's get started with an overview of 138 Student Living. So 138 Student Living, or 138 SL, was incorporated in August 15, 2014. So the company was established to design, construct, and operate living facilities at UWI, right, under a concession agreement between the company and UWI Mona, right? There's also 138 SL Restoration Limited, which was incorporated on April 30th, 2015. A lot of persons may not be aware of this. And 138 SL Restoration is a subsidiary under the company, and it was established to restore, reconstruct, and operate living facilities at UWI under the restoration concession agreement. So we're going to talk about both agreements when we're going through the company overview. And so 138 and 138 SL Restoration collectively constitutes the group, right? On the stock exchange, there's actually two tickers that you might see. You might see 138 SL and then 138 SL VR. That's their preference share. We'll talk about that a little later when we're looking at the dividend policy. So the company was established. Just a little bit more about the company here and what they do. So the company was established as a special purpose real estate investment vehicle, and it was founded by, it says here, Mr. John Lee, the first chairman of 138 SL, and some other members there. On July 3rd, 2014, the concession agreement was signed with K Limited and UWI Mona. All of this information is in the prospectus, by the way. So I'm just reading through here. The concession agreement required the company to design, construct, and operate 1,584 units in 3 development phases over a 4-year period, right? It says here that the agreement is for a minimum of 30 years and a maximum of 65 years. The exact number of years will depend on their ability to achieve a real after-tax 15% internal rate of return, right? Upon the expiration of the concession agreement, then 138SL will transfer the dorms back to UE. And then for the term of the 138 concession agreement, then they have the sole right to charge and collect fees for occupying its accommodations, right? So they have the right to adjust the fees annually based on a financial model which includes the impact of the US and GMD exchange rate, right? Also added to this, UE Mona guarantees them a minimum of 90% occupancy rate. And we actually heard on the earnings call last week that they're looking to essentially be at full capacity for the coming semester. So we went through that on the earnings call we had with them last week. Now the earnings call is on our investor relations channel. If you're not familiar with that channel, just go to the channel section and you'll see it. On that channel, we do earnings calls, AGMs, etc. So you're able to look at the earnings call that we had with 138 just last week to learn more about that I just mentioned. All right. So as at this date, or at least the date of the prospectus, they've completed 2 out of the 3 phases that were mentioned. And so phase 1 has a total of 432 rooms. Phase 2 has 576. So it says now on April 10, 2015, the concession agreement was signed between 138SL Restoration. So this is the other side of it now, right? Under this concession agreement, they're agreed to renovate, expand, and operate Gerald Layla Flats and Irving Hall. Those who go to UA will know these places very well. I didn't go to UA, so they don't roll off the tongue the same way for me, right? So on the completion of the project, they would operate up to 722 units. So this concession agreement is for a minimum of 25 years and a maximum of 30 years. The exact number of years, of course, is based on a rate of return of 9%, right? So similar to the other concession agreement, there's a target internal rate of return, and there's an agreed number of units up to that they'll be managing, right? So for the term of the agreement, again, they have the right to charge and collect fees for occupancy, and they have the right to adjust the fees based on, again, what they believe is an appropriate rate. Right, and again, we see here a guarantee of 90% minimum occupancy rate of no less than 51 weeks out of the year with respect to Gerald Layla, and 38 weeks as it relates to Irving Hall, right? So under this agreement, it would constitute 72 rooms at Gerald Layla and 650 at Irving Hall. During the redevelopment, UE had requested a variation to the design, and that variation, which was accepted, led to a reduction in the number of double rooms and the increase of single rooms, essentially just letting you know that the terms were adjusted slightly there. All right, and for that phase, or that what has been completed so far, we see the total number of rooms here, right? So you're getting the idea so far. There's a concession agreement that they have with UE. It states the terms, the number of rooms, them being able to realize a certain rate of return, etc., right? So for those who may not be familiar with how they make money, that's how they make money, right? So this is a look at their management team. So the CEO, Cranston Yuan, was on the first page. On this page here, I had to go way back. So that's the CEO, and other members of the management team is what we have on this page, right? So we're able to actually meet with a few of them, or we may hear from the CEO sometime this week or next for our CEO series interview to discuss the offer, right? So let's talk about the offer details. All right, so how an APO works, there's essentially an issuance of additional shares, typically at a lower rate for existing shareholders, and then a set rate for the public, right? So in this case, they have 928 million shares already. And what they're showing you here is that after if the offer is fully subscribed, they would have 2.8 billion shares outstanding, right? These are the number of shares that would be outstanding for the company. We'll get into some more details about this later on. but this is what we have working with at this point, assuming that everything closes successfully. Some key dates here for you to know. Prospectus was released on the 31st of August. Opening date is September 8th. So that's 4 days from now. That would be this Friday. And the closing date would be October 6th at 4:30 p.m. There are two prices, as I mentioned, for the subscription. 405 is for existing shareholders, and 440 is for any new shareholders, right? The rest of these dates are pretty standard. So basis of allotment will be shared within 6 days of the closing date at any point between September 8th and October 6th, based on the number of shares and the fact that it's price, etc. I don't suspect we'll see a case where this is closed on the first day, but I would say, as usual, if you're interested, you wouldn't necessarily want to delay in sending in your application. All right, so this here shows, so they have stated in their prospectus an option to upsize the offer. Now, what this means is that if the company sees opportunity or that there is enough demand for them to be able to raise more money, that's what they'll do. So, right, so at the very minimum, they're seeking to raise 2.15 billion. If they're able to upsize that to 3.2 billion, that's what they're gonna do. All right, and that's what you're seeing here in terms of how they would use that money. So reduction of their indebtedness, and we'll talk about that a little later when we get to their use of proceeds. But if they're able to raise the full amount, they'll use 2 billion to help reduce their debt, which they're expecting will lower their finance costs and be able to allow them to realize more profitability, be able to pay more dividends, etc. Again, some of which we discussed in the earnings call last week, right? Other investment opportunities that would be allocated up to 1 billion if the offer is upsized, and the transaction costs would be up to 140 million if it is upsized. So based on the amount that the company is raising, there's a fee that they have to pay, and that's the fee that you're seeing in terms of transaction costs. Okay, so in terms of the proceeds and how the funds will be used, so it says here, so we mentioned the transaction costs before, and we mentioned how they plan to use the funds if it was upsized. So let's talk about the use of proceeds. So it says here, the proceeds for the APO will be used to reduce the company's debt by 1.5 to 2 billion. And that's a 36 to 48% reduction in the company's debt, right? So that's almost half the debt going away. So this reduction of its debt is expected to reduce the company's interest costs by 112 to 160 million and principal payments of 143 million to 260 million per year. So that's a lot of savings, right? So this would result in an estimated total savings of 255 million to 420 million, which could be annually distributed to shareholders via dividends, right? So this to me is a big deal if you're a shareholder or interested in this company, because if you're a dividend investor, and again, I'll make a plug for our newsletter here. We did an article last week on the relevance of dividends, especially in this climate. If a company is freeing up this much cash to be able to pay dividends, the dividend yield, first of all, may start to look more attractive, and they will have more cash because they're using less to service debt, right? So that's kind of the idea here between what we're seeing in terms of the use of proceeds. All right, so I'm seeing a question from Shelley. Will we be looking at the 5 to 10 year price history? So we typically don't do that for offers, Shelley, but I can try to see how much data we can get. They were incorporated in 2014. Can we get 10 years? I'll look at the price history, Shelley. Just remind me to if you see me finish and we don't look at it. All right. All right, so let's look at the financials. So what I'm going to do actually for this part, I'm going to skip over the financials and then go to the dividend policy. Then we'll read through the MD&A together. All right. So let me skip these, and then I'm going to talk about the dividend policy, and then we go to the financials, right? So the company has paid on its ordinary shares a 13-cent dividend that was paid on February 23rd this year, a total amount of about 54 million. Again, they're saying that once they're able to reduce their debt, reduce their finance costs, they're anticipating this dividend to go up, and thereby the yield would go up, assuming the price remains where it is right now. All right, next they have a preference share. Remember I mentioned the 138 SLVR, so that's their preference share. As a part of their IPO, they issued 34 million in cumulative redeemable preference shares. The preference share carries a floating rate dividend indexed to the 180-day weighted average Treasury bill yield plus 3%. So these preference shares will mature in 2044. And the preference share dividend for the years 2014 to 2018 was 38 million and was paid in December 2018. And the preference share dividend payable between January 2019 and June 2023 is 43 million. All right, and the proposed dividend yield here is the directors expect the company's short-term investments and strategic plans to result in growth of its profit and distributable reserves. In the near future, they anticipate paying a semi-annual dividend of up to 90% distributable income, right? So this is your anticipation going forward. Again, it's really important that you watch the earnings call, because we spoke in depth about this last week in terms of the state of the company's finances, because, for example, dividends can only be paid from existing cash, right? So the company is going to be putting themselves in a position to have more cash available to be able to pay more dividends to its shareholders, right? No, Shelly, and it's not the first dividend. It's not first and only. If you actually, they've paid dividends, I believe, consistently so far, but we can confirm that. Sure. Let me just do a quick check, actually. Looking at their corporate actions. Oh, well, I'm only seeing one on the JSE, but I can't necessarily trust that because the JSE did a remake of their site, so I don't know the history at this point. All right, so I'll have to check that. All right, so this is speaking about how to apply. So we're going to go to that later. Instead, let's look at the prospectus. All right, so if you have questions, feel free to pose them in the chat. We're going to take Q&A in 30 minutes. I'll answer any questions that you have, as well as share my thoughts on the offer itself and what I think are things to look out for 138 student living. All right, so we have here the prospectus that was released a couple of days ago, and we have here saying that they're seeking to issue 513 million new ordinary shares with the option to upsize for an additional 256 million shares as follows. So 195 million shares to non-reserve share applicants. That's the general public. That's people like me and you. And 318 million, 515,000 new ordinary shares for the reserve applicants, including 138 SLT members and strategic partners. This is standard stuff. And the subscription price is $405 for existing shareholders and key strategic partners, or $440, right? Now, I do see when you look at the top 10, which we're going to look at in a few minutes, this has like heavy institutional investors currently. So I wouldn't be surprised if this offer is actually fully subscribed based on just the top 10 I've seen so far. And I'm thinking of some companies who may be interested in the opportunity to maybe own shares as well. Of course, I'm not going to speculate, so I won't say it publicly, but the top 10 was very interesting to see, just the mix of top 10. And as I said, I'm just thinking of just other companies who may be interested based on who is in the top 10 currently, right? So we're going through the prospectus. So of course, I encourage you to read the prospectus on your own. And what we're seeking to go through here is just high level, right? So as I go through the pages, I'll just zoom into some areas for you to kind of understand how to read it through if it's your first time. So we looked at the concession agreement already. We spoke about 138 SL restoration, what that means. Assume that a 138 SL team member means somebody who's a permanent employee or a director as at the opening date, which would be September 8th. And let me see what else. For those who don't know what an APO is, we spoke about that before. It's essentially the companies issuing additional shares when they're already listed. All right. Let me see if there's anything else worth mentioning here. I think that's it. All right, so let's go to some other sections here. Okay, so we don't typically do this, but since I actually didn't get a chance to read it, we're going to read the chairman's letter together because I haven't read it yet. So just in case there's anything that we need to catch, we can go through it. So the chairman here is speaking about some milestones for 138 to date. So it's a strong partnership with Uimono. Current year's occupancy levels at 93%, and as we mentioned, they're anticipating that they will be at max capacity for the semester. So they've been able to restructure debt instruments with a fixed interest rate, a formerly variable rate, resulting in significant savings in interest costs, as well as an 18-month moratorium on principal payments. They've obtained the necessary approvals from debt holders for the APO, and they made their first dividend payment in February of this year. So that answers your question, Shelley. So first dividend payment. So what was mentioned, Cashwayne, was the payment to the preference share, right? That's what would have mentioned that we covered previously, all right? So speaking about the global 19 pandemic, I think we kind of understand what the impact of that would be already, so I won't read it there. This APO is intended to further shore up the future of 138SL and ensure that they will continue to be the Caribbean's premier provider of university housing. And this prospectus provides details on the APO. That's what we know. That's why we're going through it. So let's talk about their capital structure here. So it says the group currently operates a total of 1,464 rooms at 4 locations under the current concession agreements, and we went through the different ones before. So their current capacity exists to build another 842 rooms. So the company is now at a stage where it expects to generate significant amounts of free cash flow, right? So they expect to be able to pay regular dividends. So they're going to go to twice a year and up to 90% profits with a yield of approximately 10%. Now, if you guys know me, so I have a little bias here towards dividends being 10% or higher. So I don't know if they heard me speak about this before. That's why they target this number. That would be good to see, right? At the proposed offer price. Okay, so there's a caveat there, right? So the yield at that price means, of course, if the price should go higher, then the dividend yield would be lower, right? So I'm targeting a yield of 10% at the target price. And in my mind, I'm now thinking, is it 10% yield based on key shareholders price or 10% yield based on public price? I'm going to assume it's public price. That'd be around 44 cents per share dividend, right? That would be 10%. And this builds on a company's first dividend payment. We saw that in February of this year. And then they speak about more the dividend policy in section 12, right? This APO is intended largely as a strategy to better optimize the company's capital structure by replacing a portion of the company's over 4.2 billion in debt with equity and to better align its cap structure with its income streams. Orville, I did not say that one. Listen, don't put any words in my mouth, Orville. So it says by doing so, the company will be able to opportunities to grow its top line revenue, right? So some key things here that I'm seeing so far. One, they have the ability to add more rooms, which will increase their revenues. Two, they're going to be able to reduce their debt which is going to lower their finance costs, which is going to provide more cash, which is going to allow them to pay more dividends. And seriously, Orville, I'm looking at that yield very, very closely, right? 10% is definitely interesting, right? So the APO should also broaden their shareholder base whilst still recognizing that their existing shareholders, having supported the business over the years, should be given an opportunity to invest in the company on a priority basis, right? So they're welcoming new shareholders while saying to the existing ones, hey, we're giving you a special price for being an existing shareholder. All right. So accordingly, we have allocated a portion of new ordinary shares in the APO to existing shareholders who may subscribe at the discounted price, and that discounted price is $4.05. All right, so we'll talk about how to subscribe later. All right, so let's see the letter from the CEO as well. All right, so he became CEO in June 2019, so he has served 4 years. So in his 4 years, his team has had to be innovative and nimble in the face of a pandemic. It's quite interesting. You become, CEO, and then within that first year, you have a pandemic to manage. So, definitely kudos to Cranston on what he's been able to do despite the circumstances. So it says during this critical period, they were able to pivot by engaging in short-term revenue generating opportunities, manage costs, and restructure their loan notes to enable sustainability of the business, right? And we're going to be going through the MD&A, so we'll get to that a little later. They discussed their pivot into short-term rentals in more detail, so we definitely have to read through that. In terms of increasing profit margins, it says here it required them, that's a pandemic, to conduct a detailed review of their cost structure. So some decisions that were made, especially in relation to their staffing needs, were difficult but unavoidable as the company had to become more efficient. Right? Efficiency for a company means more profits. More profit means investors typically are able to benefit. Right? So the cost discipline demanded during that time had continued in the current environment. Let's talk about the cap structure. Well, we touched on this a little bit already, so I don't think I want to go into that. Let's talk about opportunities for growth here. So it says under the existing concession agreement, they have the opportunity to construct and operate an additional 842 rooms. If that option is exercised, then between 138 SL and 138 SLR, that's a restoration, they'll have 2,306 rooms, right? So I was trying to work this out, and it's probably a good question to ask. What's their average revenue per room? Is what I'd probably ask. I don't know if we simply divide their revenues by the number of rooms, but yeah, that sounds like a great question to ask, right? And an approximately 60% increase in the existing housing stock, right? So based on the revenues they're currently generating, they're gonna be able to increase their capacity by 60%, right? There's also an opportunity for them to grow both regionally and internationally. Again, something that we spoke about on the earnings call. We spoke about two key things here: opportunities for them to work with other universities. So the CEO kind of alluded to that. And next, opportunities for them to go regionally, right? So they're pointing to that here, and further grow their short-term rental business revenue stream, which they've only just begun to explore, right? All right, so, okay, actually, this would be interesting to see, I think. So in determining the price for the new ordinary share, the company and GK Capital, that's their lead broker, considered a number of factors, including one, the current state of the securities market, a very big factor here, the financial performance of the company to date and its outlook. Again, that can be covered on the earnings call, so check that out. The terms of the concession agreements that govern the company's relationship with UWI, the strength of the board and management, and the economic prospects of the industry, which I'm assuming is both in the short and medium term. All right, great. So it says here, in doing so, they're expecting that investors will benefit from the significant value created by their strategic objectives. All right, cool. So that was a good read, I think. So summary of invitation, we went through these already. Let me just do a quick run through to see if there's anything that I would like to cover. All right, so forgive me. So usually we try to look at the risks associated with a company. Again, there's no risk-free investment, so we probably should look at a couple of these. So risk relating to maintenance and repairs of student residences. So it says the company's primary business is to lease rooms to students. The company is also responsible for upkeep, repair, maintenance, and/or renovation. So it's saying pretty much this from time to time may disrupt operations. So I actually think of it just like the toll road. Sometimes you're driving on the toll, you see them doing repairs. You can't use both lanes, but the toll is still operational, right? So they may not have full access to all the rooms all the time for maintenance and other purposes. That's something to factor in. There's also risk relating to damage to student residences, whether intentionally or unintentional, weather, earthquake, anything else like that. The other risks, I think. Okay, let me read this one as well. Risk relating to use of leverage, right? So prior to this invitation, the company has used loan capital as a significant source of financing. As shown in the unaudited financial statement, shareholders' equity was 4.8 billion and non-current liabilities were 3.7 billion. Right? So the company's ability to make payments on or to refinance will depend on its ability to generate cash. That makes sense. From its operations or to raise additional funding. They're doing that now to be able to manage that same debt position that's been spoken about here. So the risk here is that the company may not be able to generate sufficient cash flow from operations, investments, or financing to enable it to pay its indebtedness. And of course, again, so let's say that they're able to raise all the funds that they're seeking to raise, they would have shored up themselves in terms of mitigating against this risk. And I do agree, Renee is saying that she appreciates how these risks are stated in a realistic way. I definitely agree with that as well, right? And then, of course, standard is share price volatility. The company essentially can't guarantee that the stock will move in one direction. The company can't also guarantee that they will pay dividends. Dividends are never guaranteed. We said this on our class on Saturday. It's always subject to whatever is happening in the company. All right, cool. So let me see here, just a quick scroll. Again, we spoke about the option to upsize already. So I apologize, guys, if you're not seeing right now. I'm just kind of doing a quick scroll through because I want to get to the MD&A. All right, so I said we'd look at top 10 before and then we go to MD&A, right? So I want you guys to look with me at this top 10 and tell me what you think, right? So so for the top 10 shareholding as at June 30th, we have here Sagicor related accounts, right? So all of these accounts related to Sagicor, 154 million or almost 38%, 37.3%. Then we have NCB Insurance Agency, it's 82 million shares, almost 20%. K Limited, 16%. Then you have Barita, 13 million shares. Then you have GMMB, 10 million shares here for their related accounts. And then with Cinco Pension Fund, VMPM Pension Fund, MF&G Asset Management. All right, so this top 10 here accounted for 90% of the shares, right? And the other shareholders were about 45 million, right? And if you check actually in terms of the volumes of shares traded, you could tell that it has a large institutional investor base just based on how just the volumes are traded that you typically see on an average day, right? So they shared this here, which I appreciate. Then they shared what they are expecting it to be post-invitation, right? Assuming all new shares are subscribed in full, of course, just an assumption. So Sagicor's shareholding would move from 37% to 16%. NTB insurance funds, so all of them would actually decrease because essentially more shares are being made available. And so you have here other existing shareholders. That's what currently sits outside the top 10. Then you have the reserved shareholders taking up pretty much 318 million, right? That's what they're anticipating here. So really what I'm looking at is the number of shares that is outside of the reserved is really 195 million, right? All right, so we spoke about the dividend policy. We covered this before already. Okay, so let's look at the MD&A. Let me know if you have any questions, guys. Yes, Orville, a lot of institutional investors, which actually I think puts them in a position to, one, I think maybe the way that they're going about this APO, they want to increase the investor base clearly. I anticipate they want to also have retail investors on board. Now, the thing with institutional shareholders, usually for I would say more interesting trading patterns, usually you want more retail investors on board, right? So that's the board. I won't talk about the board today. Let me go straight to the MD&A, right? We spoke about the management team already. So the MD&A. So we're not going to talk about the macro environment. I think that would be something that you should definitely go through if you're not familiar, but we've covered it in other formats on this channel already. So we'll go through. I'll just look at anything that is specifically related. So like point 15.1.2 says here, the expansion in GDP was primarily attributed to the increased productivity in all industries except for construction. Those industries include hotels, restaurants, transport, storage and communication, and agriculture. The continuous improvement in the hotel and restaurants industry has a direct impact on 138SL, which also provides short-term accommodations for tourists. So according to the PIOJ, in December 2022, total stopover arrivals increased by 93%. And because they offer short-term rentals, that would be a complement to what they're doing, and it would be good for their business, right? So as the Jamaican economy continues to rebound, they remain a premier player in student accommodation, and it expects to grow in tandem with the economy, which makes sense, right? So let's look at outlook and strategy. This is where we're going to spend most of the time here. Look at the numbers, and then we will see any Dean, I see your question. I could, I guess, look for the IPO prospectus. It will I say it's more? I think we could look at. All right, so I'm going to tag this question and I'm going to try and answer it at the end, okay? I'll need to look for the IPO prospectus, because I want to say you can look at the existing shares and see how much was at IPO, but I don't necessarily want to assume, but that's what I'm thinking off the top of my head, right? No, Shelly, and it didn't say if it's Airbnb. I mean, as I read through, maybe it'll come up, but that's not what I've seen so far. Orville is saying, so institutions just buy and hold and retailers do the heavy lifting because they don't trade often. In a sense, right? Because you notice a couple of pension funds aren't necessarily looking to flip stocks, right? They're buying to hold because their clients are pensioners, right? So usually when a person is investing in a pension, they're 10, 20, 30-year time horizon. So that's kind of the outlook that a pension fund would be investing in. Now, a pension fund may rebalance from time to time or exit positions for whatever reasons, but you just don't know when. And I guess if they're doing that, maybe the number of shares they're selling, they may want to maybe organize those trades. I mean, who knows, right? All right, so it says here outlook and strategy. So the group has a unique three-pronged value proposition. So first, it's saying here it has a captive market. So they have limited competition coupled with the niche nature of the market, allows the group to report predictable and sustainable cash flows based on the agreed occupancy rate, how they operate, etc. So accordingly, their revenue may be less susceptible to non-systematic downturns in the economy. Next, you have an inherent FX hedge. So under the concession agreement, they're allowed to adjust the fee based on a formula which kind of maintains a certain rate of exchange. And then they have the occupancy guarantee, which is 90%. So the first strategy, of course, which was covered on the earnings call last week, it says here the deleveraging strategy. So their capital structure consists of predominantly debt, and that has hindered the company's ability to make significant dividend payments to shareholders. Hence, the company intends to realign and optimize its cap structure by using 1.5 to 2 billion of the APO proceeds to reduce debt. All right, so post APO, the company expects debt levels to be between 2.2 and 2.7, and that would be a decrease from 3.2 in the debt pre-APO, right? So with the reduction of that, they're expecting to save 255 million to 420. So let's say they save the 420. If you reduce the listing costs of about 140, that's 280 million now they have, with the opportunity to be able to disperse in terms of dividends over the period, right? So which could be annually distributed to shareholders via dividends, right? So essentially, this allows the company to commence and sustain its intended dividend policy of up to 90% distributable in net income, right? Next, they're able to expand their capacity. So this is a part of their strategy. We spoke about this, I believe, an additional 842 rooms. Short-term rentals as well is mentioned here. So this revenue was generated primarily from sporting and UA affiliated groups. Accordingly, they intend to deepen its footprint in the group booking segment, which is showing buoyant demand, representing on average between 8 to 11% of total revenues. Yes, Shailen, we have an interview with the CEO. The date has not been set yet, unfortunately, but I am anticipating it should be this week, right? We are in discussions to finalize a date, right? So it says for FY22, short-term rental for the group increased by 101%. For the 9 months, their short-term rental income was 84.6 million, or 8.07% of total revenue, right? Okay, so that is high-level strategy where they're focusing on. So let's look at just a little. We're gonna go through for a couple of minutes their revenues, profitability, etc., and we'll try to go to the outlook. Now, what I would say before I continue here, because this is a prospectus review, we're not going to be able to go through the prospectus in its entirety. It's a review. It's meant to be high level. So I encourage you to read the prospectus. It's actually not a challenging read. It's quite easy to go through. So before you make a decision, you want to read the prospectus carefully. All right, let me continue. So this here is their 5-year review of audited financial statements. All right, so what I'll do is focus on some key areas. So normally I focus on profitability, state of the balance sheet, and cash flows at a high level. So since we read their strategy already, we're just gonna focus on some key areas, right? So this is their group revenue breakdown for 2022. So it's speaking to pretty much how their revenue is composed. This speaks to their operating profit. So we see where it would be a little bit over 400. Am I reading 400 million? Yes, it says J million. Okay. 400 million, and it has increased up to, so from about, well, let me read the notes just in case I'm misquoting here, resulted in operating profit with a compound annual growth rate of 22.01% over the 5-year period. So operating profit for 2022 was 698 million, or almost 60% increase, or 260 million improvement over the 2021 figure, right? So that's quite a jump over the previous year. For 2022, the rise in admin expenses was driven by increase in staff costs, utilities, repairs, and maintenance. That's something that you're going to have based on your type of business, and other operating expenses. And the profit for the period showed similar growth trends in line with revenue growth for the corresponding years, except for 2019. All right, so that's what we're looking at here. So 2022 saw their operating profit growing significantly from 2021. So that's where they currently stand, right? We profit before taxes here. Let me focus here. So for 2022, they posted PBT of 335 million, or 138 million increase compared to the previous year. I'm not going to talk about 2020. I think we would have gone through that a little bit in terms of the earnings call already. So this is their profit before tax. So they would have mentioned some one-off expenses for 2019 already. And so this is where they sat for 2022. All right, so that would have still been their best performance in terms of PBT for the last 5 years. All right, so balance sheet review here. So total assets stand at 9.72 billion compared to 10 billion in 2021. They have a compound annual growth rate of 2.4%, and they have non-current. Well, let me just find the balance sheet. It's probably easier. All right, let me see what it says here. So from an operative and admin standpoint, they will be adopting a digitization approach for students to settle their bills for student accommodation. So we spoke about this in terms of their partnership with NCB Link. This approach is expected to positively impact their receivables, consequently improving their working capital and operating cash flows, right? If students are able to pay on time, to pay more efficiently, more efficiently for them as well, then they're able to improve their cash flow. All right, liabilities stand at, well, current liabilities at 1.15 billion. We spoke about the loans and that amount before of 3.92 billion. So the decline in current liabilities was based on a reduction in trade payables, which decreased from 1.1 billion to 561 million. The marginal decline in the current ratio stems from the significant reduction in their accounts receivable versus the size and reduction of current liabilities, right? So they're speaking to their current ratio right there. And this is their return on equity from 2018 to 2022. So for the last year, they were able to see 7.16% return on equity. All right, statement of cash flows here. So this would be their income statement for the 5 years. So income would be actually slightly higher than it was in 2020. So what we're seeing here. And the profit is their highest now, right? 318 million right there. This is the state of their balance sheet for the last 5 years. So their asset base is just slightly lower than its peak. And current liabilities, non-current liabilities, we spoke about those before. And then, of course, hold on, what I wanted to look at is, yeah, so the non-current liabilities here is it's what's going to be significantly reduced by the APO, right? So this figure that you're seeing here. And then cash flow from operations. This is what we're seeing for the last 5 years. So the cash flow from operations improved for 2022. Cash flow from investing activities, cash flow from financing activities, and the net changes here being 135 million. Right, so that's what we have here. Cash at the end of the year, 170 million. All right, so let me see if there's anything else I want us to go through. I believe there's an Outlook section. That's actually what I'm looking for. Or does it not have that? Okay, all right, so let me do what I promised to do for L.E.A.R.N, where we look at the price over the last couple of years. All right, so I'm using a platform called Ticker to review the price history. We actually have an affiliate link, and I'll try to post it under the video for those who are interested, right? But Ticker is what I use to assess the stock market in terms of price history and some other information. So for the last 5 years, this is what the stock price looks like. Seeing what looks like a peak here back in 2020 of almost $8. That's 7.55 here. So the current price of being, I think, somewhere between 435, 440 thereabout is not, it's about half their all-time high. What was the profit for short-term rentals during the pandemic? If it was mentioned, I'll watch a replay. So it was mentioned. I can get back to it quickly. They did say it increased. I believe short-term rentals accounted for, well, no, I didn't speak about profit. I spoke about the short-term rental revenues, right? I think I remember it saying it stood for about 8% of total revenue in terms of profitability. Let me see if I can find that, right? But yeah, I'm gonna search for that in a second, but we're just looking at the price history for a little bit, right? Now, usually when you look at the price history, you want to kind of match that with any events that would have taken place for the company. So what I'd be looking at is where the price has gone up or gone down, and kind of backtrack in terms of match that for any news that would have been released for the company, any reports. So the price going down here would want to figure out why. Price going up here would want to figure out why, things of that nature, right? But this is how it has traded for the last couple of years. So its last time above $7 was when it was in February 2022. Then it found its way down to about $4.60. They made its way back up to almost $7, $6.58 here, and then it's been down since, right? So it's currently at around 440, as I mentioned, and this is the last 5 years worth of data. Let me select all. So I'm getting data from 2015 here. So it's given a 5% return over the last almost 9 years, right? So, I mean, when you look at it from that range, of course, you have to take in context the season that we're in. But of course, opportunities would have been there for shareholders to realize returns and so forth, right? All right, so that's that one. So I'm going to try and locate the profit information for you. I think I might have mentioned it, but I'm just not sure. Net profit for short-term rentals specifically. That's what I'm looking for. I don't think the profit is broken out in that way, L.E.A.R.N. Yeah, I don't think the profit is broken out in that way. Short-term rentals, it speaks to the amount of total revenues. Let me share the screen. Yeah, so this part mentions short-term rentals, but it doesn't mention specifically its aid in profitability, right? But that's a question, of course, that we can ask for the CEO interview, right? All right, cool. So I'm going to talk about how to apply, and then hope I'm not missing anything, right? So in terms of how to apply, so far, and I think Orville might have asked this, so it's still within the early days of the prospectus being released. So selling agents will typically be added a couple of days after, right? It's been a weekend, right? But this is the way to apply standard stuff. You need a JCSD number, you need your TRN, you need your payment information, you need your photo ID, a GK One Wealth signature app, right? And not an app I've used before, but I'll probably speak to GK team and see if they can give us either a demonstration or something, because I don't think I'm familiar with that app specific. I'm trying to remember if that was the app that they used for SpurTree. I don't remember, right? So I don't know if it's a new one, because I remember this saying that, remember seeing an article that they launched a new platform this year. So this might be it, right? Anyway, these are the requirements, the steps to apply. You'd go to gk1wealth.com. So let's actually probably that sentence doesn't make sense. I hear my wife saying that sentence was not properly constructed. All right, so I'm going to go to that platform. This is it here, GK One Wealth. So here it is, 138 student living. Here's Project Star for those who are interested in applying as well. So do you need to sign up first? So you click apply here. And I mean, this process, if you've ever applied for an offer before, is fairly standard, right? So you'd select the pool that you're applying for, whether non-reserved or reserved. The minimum number of shares is 1,000. I was actually looking for that information, share increment of 100, and that's the price. So you'd click apply, follow those steps, attach a payment, and pretty straightforward from there. Right. All right. So that's that screen that you saw, GK One Wealth. That's what is mentioned here. What are you talking about there, Orville, in terms of 5%? Let me know. So next, I guess the only thing that I'd probably mention here, if you share an account with someone, they would need to authorize the application as well. That's what that is saying. And then this is just simply showing you the payment option. So typically you have an account that you send the funds to. You usually want to state what you're sending the transfer for so they can identify it. And it's pretty much straightforward from there, right? So these are the options there. I'm just sharing it long enough for you to screenshot it, but it's in the prospectus. That's where I took it from. So of course you can go there and check it out as well. All right. All right, cool. So I believe we covered all the pertinent details. Now let me talk about what's next. All right, so the next thing that we're going to do is speak to the CEO. Again, that interview is not confirmed yet, but I'm hoping it will be confirmed in short order. And we will likely have a Q&A as well with the lead broker, which is GK, and the 138 SL team. Now there is an investor briefing this week, so I'll be able to get in some questions at that investor briefing. So if you have questions yourself, like I have a ton of questions that I'm gonna go through after this review. So if you have questions, send them to me. If we're not able to have the CEO interview on Wednesday of this week, I'll ask some of those questions on Thursday morning, which is the investor briefing. And then, of course, I can share updates in our community group. So let me share the link for our Telegram group now, which you can go to, because we have a dedicated channel in our Telegram group to discuss IPOs, APOs, and rights issues. So you're more than welcome to join that group and join us in the discussion. In terms of what I think about the offer, now, of course, I have to say, I'm not a licensed financial advisor. So I'll just speak about the things that I like to say now. I think it's a good opportunity that the company has to reduce their debt. As the CEO said last week, they are significantly leveraged, so they'll be lowering that impact. They are going to be increasing their capacity by 60%, so almost 2,300 rooms. And I don't know when the development on that will start, but I imagine it will follow shortly after they receive the APO funds, which means, let's say, another 6 to 12 months, they have no increased capacity. So let's say next year this time, they have no that increased capacity. What that will mean for them with the reduced debt, with more rooms to rent, and now that increased cash position, I think this pretty much is looking like a dividend play in terms of the stock, right? The yield that they're targeting is 10%, which would definitely put them at the top of the list in terms of dividend. I'm not sure I'd say number one, but they'd be up there in terms of yield. Now, of course, the higher the stock price, the lower the yield. So you'll have to track that. But the yield is personal, right? So based on the price you pay, that's what determines your yield. So of course, if you were to take advantage of the APO, then you're looking at getting to that 10% yield. So pretty much you're weighing this, because cap gains aren't guaranteed. We spoke about that again on at our class on Saturday. Cap gains aren't guaranteed, and usually they what was I gonna say? Cap gains aren't guaranteed. So if you're a dividend investor, then this offer would be most appealing for you, right? Oh, but Orville, okay, so yeah, so you're mentioning the 5% growth in 9 years of the stock price. There are a lot of companies, Orville, if you look at the long-term chart, because remember that 5% has to be within context, right? We are in pretty much a time in the market where the market it's clearly not a bull market by any stretch of the imagination, right? And remember, I mentioned that they did have a peak of about almost $8 in price, right? So if we looked at the graph at that point, the graph would say higher, right? So let me actually show that to you, Orville, because I feel like you setting me up here. Am I able to get a specific period? No, I'm not. All right, I won't get into that right now. All right, but yes, I was saying that if you're a dividend investor, it would certainly be an attractive offer for you. In terms of whether or not the offer is expected to be successful, I mean that's up to investors. Now, my suspicion is there is a fair amount of institutional interest, and they're also gonna be, I think the company is trying to expand its reach in terms of maybe retail investors as well, right? Because as Orville stated earlier, and we know that the institutional investors aren't going to necessarily be trading daily or monthly, right? This is gonna be retail investors. I believe they have an opportunity. Does ticker show what caused the large dip? No, so it wouldn't show that. So that's why I'm saying, Shelly-Ann, so when you see, so what I do know, if I'm looking at a price history and I see a dip, I'm looking at whether or not a report came out, article came out, any announcements, etc., to see if either it could be either something that was reported in the news that maybe led to that. It could be because you also want to explain the run-ups as well as the sell downs, right? So it's really, going back through matching those with the price to see if you can find a correlation, right? Okay, so yeah, so I'm saying that I think that there's opportunity for those who are interested maybe in a dividend play. In terms of cap gains, of course, maybe the company won't see its. I think a lot of companies in general may not be trading at fair value, right? That's what we spoke about on the earnings call. So we asked the CEO if he thought the stock was undervalued. He said based on their current price, the stock would have a fair value of about $11. So it's trading significantly less according to his perspective. And so, I mean, I don't think you're gonna see companies trading at fair value in this current climate. So again, that may be an opportunity if it is that the market kind of rebounds to like a bull market, then there could be a turnaround in terms of the company there, right? That's kind of my perspective. I believe there was a question from someone that I said I would pin. Okay, so let me check that one for you now, Sheradine. Hopefully I'm pronouncing that correctly. So 138 student living prospectus. So I'm just gonna look at the invitation page. That should answer the question. Was the IPO subscription, is the APO more? If yes, why? I don't know if I'd be able to answer the why for you, but if you're thinking why may they be asking for more shares or more money now, I mean, the use of proceeds kind of speaks to that. So I found the prospectus and I'm waiting for it to load. I'm just going through to see if there are any more questions. So Orbelis question was the projected cost to build 800 rooms. I don't believe I saw that projected cost. So excellent question. That's one of them that we'll ask Mr. Yuan when we meet with him. I'm just going through to see if there are any other questions. So Shelly and I did answer this one about the dividends already. It was there first in February. All right, so I found it. All right, so this one seemed to have been the ordinary shares and the preference shares in one. So it was 98 million ordinary shares. So the APO is more, and it was actually at $4, right? And then the cumulative preference shares, 33 million shares at $5. And it was actually brought to market by JMMB, right? So the price now is actually very close to, I hope I never missed this one when we were saying zoom in. Hopefully you have been able to see so far. And Cashwin, I mentioned the selling agent. So far it's GK. So usually when a broker has an app, it means you don't really need additional selling agents. You can apply through the app with your JCSD number. So Shelly, and I wasn't able to confirm about it being for Airbnb for the short-term rentals, but I've pinned the question. I'm going to ask it to Mr. Yuan whenever we meet with him. And then I'll ask the question about the profitability as well. Well, so Shelly, and he was just saying that he thinks the fair, according to, I believe he said the book value, they would have a fair value of about $11, right? Check out the earnings call, because I was waiting for your comment on it, Shelly, and I didn't see your comment on it, which means you probably haven't watched it yet. So watch the earnings call and let me know if you still, what's your take on his comment about the fair value, all right? All right, so I'm gonna bookmark these questions that are here, and I'll be sure to ask the CEO when I meet with him. Again, if you're subscribed to our mailing list, just know that we're gonna have that announced as soon as it's confirmed. Check for our social media as well. Yes, Shelly, and that's for the other channel. Right? United Opinion, yes, it is a dividend paying company. Yes, that would be a fair statement. So they paid a dividend in February, and their intent is to start paying dividends twice per year, and they're targeting a dividend yield of about 10%, right? And the channel that Shellen is asking about here, I'll actually share it for those persons here who may not be aware of it, but we have an investor relations curated channel, and that channel is where we have earnings calls, AGMs, investor briefings, etc. So please be sure to check out that channel. Investor Relations Curated is the name. So the reason behind creating this channel, so it allows us to do two things, right? We have engagements with clients ourselves for earnings calls, AGMs, etc. We wanted to separate that content because we found that, let's say that for the 138 student living earnings call that we did last week, if you're not a 138 student living shareholder, you may not be interested in that particular content, right? If we went through the Edufocal earnings call, if you're not an Edufocal shareholder, you wouldn't be interested in that content. Now, if you're not interested in the content and YouTube sees that it sent you videos and you didn't watch them, it's going to stop sending you videos from our channel. But you may be very well interested in the prospectus review and not the earnings call, right? So I thought it made sense to separate it. So far, we've seen similar viewership on the earnings call as we did on this main channel here, even though we have more subscribers over here. So at least for now, it's gonna remain that way until we have reason to adjust, right? So investor relations curated is the investor relations channel. So be sure to subscribe to that channel as well. Maurice is asking, there's no other. So I'm saying with an IPO portal or APO portal, you don't need other selling agents because you can simply apply with your JCSD number from any broker, right? So that's the GK One Wealth portal. So you can apply there regardless of where you have a brokerage account. All right. All right, everyone. So usually for the prospectus review, we're not able to go through everything, as I said. So I apologize if you wanted me to maybe dig into the numbers a little bit more or something else. Just let me know the questions you have. I think the most important thing that you want to understand the state of the company, which we went through. You want to understand how they're going to use the money, which we went through. You want to understand what's going to happen after they raise the money, which we've gone through. So I think you know enough to either trigger further research, or you can wait till we go through our series of content, which will include the interviews, etc. And then you can make a decision. But the opening date is September 8th. Because it is an APO and because they're planning to upsize, I wouldn't necessarily be worrying about same day closure, but there's still an opportunity for it to close as soon as you're able to raise the funds. Shelly-Ann is saying, no, Jermaine, one payment does not make it dividend pay, right? So you notice that I did pause, right? So they paid a dividend this year, their first, and their intent is when they free up more cash, they're committing to paying up to 90% of net profits to shareholders. So they've positioned themselves to be a dividend paying company, right? I think that's okay. The minimum number of shares is 1,000, right? Why is Shelly-Ann trying to get me in trouble? All right, Shelly-Ann. So guys, I'm actually going to be covering the basis of allotment for One Great Studio is out. So I'm actually going to wrap up this stream now and actually start a new stream because I don't want to lengthen this one. So if you want to ask me that question specifically, Shelly, and ask me over there because I'm going to go live again in a couple of minutes. So I'm going to break now at 8:30. I'm going to go live. Check me over there and I'll answer that question about SSL. All right. Yeah. All right, guys. So I want to thank you so much for checking out this review. I look forward to covering more about this. Actually speaking to the CEO, going through and understanding a little bit more about where the company is headed, right? So from a profitability perspective, company outlook perspective, I think the plans are pretty much straightforward in terms of what they intend to do. So I think it's really for you to determine as an investor if that aligns with what you're looking for in a company. Again, as I said, if you're a dividend investor, it would definitely certainly be something that you'd be interested in reviewing further. And then, of course, we'll wait to see how things play out for the company. But we look forward to the CEO conversation. We look forward to the Q&A. And yeah, let's see how much we can learn about this offer. And of course, we'll try to share as much information as we can with your audience. So thank you guys for watching. Be sure to like the video if you haven't done so as yet. Subscribe to our channel if you're new. And also subscribe to our mailing list because we post weekly content that summarizes everything that we've posted, and that usually links to a blog post on our website as well, which will cover an investment or personal finance topic, right? So I want to thank you for watching again, and I'll see you in the next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms